Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. It's where we look beyond just the headlines to get you the insights and knowledge that will help power smarter decisions. I'm Forkast's Megha Chaddah, and let's kick it off with the biggest news in the crypto world this week: the hotly awaited trial of FTX founder Sam Bankman-Fried, more commonly known as SBF. On Wednesday, both the prosecutors and the defense team gave opening statements to the 12-person jury present in the New York court. According to reports, prosecutors alleged SBF committed a massive fraud, claiming SBF's wealth, power, and influence were built on lies. The defense rebutted the claims and instead placed the blame on teething trouble's startup space and also on Caroline Ellison, the co-CEO of its sister company Alameda Research and SBF's former girlfriend. Ellison has already pleaded guilty to fraud and will be a star witness for the prosecution. Also on Wednesday, the prosecution introduced their first witness, commodities trader and FTX customer Marc-Antoine Jouliard and Adam Yehudah, a former Alameda Research employee and a close friend of SBF. And on Thursday, Gary Wang, FTX's chief technology officer and the first of the witnesses from SBF's inner circle, and Matt Wong, co-founder of the crypto company Paradigm, gave their testimonies. SBF is facing 7 federal charges, including wire fraud and conspiracy to commit money laundering in relation to the operation of FTX. If convicted, SBF could face life in prison. The trial is set to last 6 weeks, and you can find all the updates on it on Postcard.News. In Singapore, the list of firms authorized to provide digital payment token services is growing. The latest is Ripple. On Wednesday, Ripple obtained a full major payment institution or MPI license under Singapore's Payment Services Act, just months after the company secured an in-principle approval. In a statement, Ripple's CEO Brad Garlinghouse said Singapore has been pivotal to the firm's global business. Meanwhile, on Sunday, crypto exchange Coinbase shared it has also secured an MPI license. This development comes nearly a year after the company received preliminary approval from the MAS. With the MPI license, both Ripple and Coinbase can now offer regulated digital payment token services in the city-state. And let's find out more about this development with Coinbase's Singapore Country Director Hassan Ahmed. Hassan, good to have you with us. Welcome to Forkast.News. Well, congratulations on the MPI license. How important is this development to Coinbase's operations in Singapore and the whole Asia-Pacific region?
Thanks, Megha. Excited to be back on Forkast. It's sort of the beginning of our journey here in Singapore. What this means is that we are effectively doubling down on Singapore as one of our go-deep markets. Coinbase typically looks around and sort of evaluates markets based on factors like regulatory clarity, user demand, level of innovation that's going on. And we decided that Singapore was one of those markets and city-states that really hit that mark. It's a very important financial hub. It's sort of an access point to the rest of Asia as well. Singapore also serves as our hub for APAC. And about a year and a half ago, we had also up-leveled Singapore as a tech hub, along with some other hubs that we have, notably India as a sister engineering hub, sort of next door. So what that really allows us to do is build within the region for the region. And so I think it helps us reduce the empathy gap between the folks that are on our team and the users that we're serving. And investments like that are really only sort of enabled and unlocked when you can build these solid regulatory foundations to build off of as well.
You already have a couple of products in Singapore. How would you expand that offering with this MPI license?
We were operating on an exempt basis after we had applied for the license, and that effectively allowed us to provision many of our products and services into the market. What this licensing does is it just allows us to really increase sort of the level of commitment and being able to operate for long term in the market. So you can expect us to announce more localizations, more products and services in the coming quarters. Our consumers enjoy this localized experience that I mentioned, and our institutional clients have access to things like Coinbase Exchange, and there's going to be many more that we're going to be introducing into the market from here point on.
We'll definitely be watching out for that. Hassan, thank you so much for joining us.
Great. Thanks for having me on, Megha. Appreciate it.
And over in the United States, not one, not two, but 9 Ethereum futures exchange traded funds or ETFs started trading on Monday for the first time ever. The ETFs are being offered by investment managers like VanEck, ProShares, and Bitwise, among others. While the trading volumes on these ETH futures ETFs was thin, their approval is being seen as a positive sign for the Bitcoin spot ETFs that are waiting in the pipeline. Let's get in Benjamin Stani of Matrixport then to talk more about them as well as other market moves. Ben, good to see you.
Thanks for having me.
Well, let's get straight to it. ETH futures ETFs have hit the US markets this week. Response was a bit muted. Now, some of these ETFs will also offer a combination of Bitcoin and Ether futures. What factors do you think could influence investor interest and market dynamics in the coming weeks?
In essence, they're just a step into what we're seeing as the institutionalization of major crypto assets, and ETH and Bitcoin have both cemented themselves as the big institutional assets that everyone is interested and wants to get exposure to. The issue with futures ETFs is they're still not as attractive in terms of like cost ratio versus spot ETFs, and there's not really a reason why if you have access to spot you would prefer trading the futures. But obviously SEC hasn't approved spot yet, and so that's why everyone was excited about ETH futures. I think it's more symbolic that the SEC is actually granting approvals rather than the listing itself of the ETF, and you can see that from the volumes.
Now, building on the past trends, do you think Bitcoin will have a positive October, especially in context of that return to the $30,000 US dollar mark?
That's a $1 million question on when do we see Bitcoin hitting certain hurdles. I think historically people like to point to the fact that like in the past 10 years, 8 out of these 10 Bitcoin has had positive returns over in October. With the ETF futures approvals, we've seen quite some marketing stance from listers, from ETF issuers. So obviously if you get that could potentially be a strong catalyst if you have TradFi players putting in marketing dollars in getting that asset class further out well known. But it's more on the sentiment side, I feel. And then one other aspect is obviously we're now heading close to about a good 6 months out into the next Bitcoin halvening. So that's a narrative that will also continue to gain steam.
And what does that mean for miners?
Miners are quite profitable at this current juncture. We can see that because hash rate continues to go up, which means more people are putting mining resources and the hash power onto the grid. We can also see the difficulty continue to go up in line with hash rate. And so this, together with Bitcoin price, has been relatively robust over the last couple of months and now even trending up last few days. And energy costs that have flattened out have led to miners actually being profitable at this stage.
Now, a Chainalysis report says that Hong Kong has remained active despite a crypto winter thanks to its OTC markets. But do you think the recent fraud incidents have dampened the crypto mood in the city?
So there's clearly a tendency for regulation in Hong Kong and for regulatory clarity and a stricter enforcement of that. I'd like to look at it on a positive scale and would hope that with the new regime and access of a licensed way for retail to access this class, as new asset class, that we'll actually see more broader participation. I would expect that quite a few people were on the sideline because they didn't want to access crypto assets with a pawn shop, an OTC player. But now that there's licensed players in place that can give retail access, that would probably be an opener for tapping a new customer segment.
And as we let you go, why don't you gaze into your crystal ball? Do you see a crypto market rally ahead?
What we'll see over the next few weeks is still probably volatility, particularly driven from the macro side. Yeah, we're already in Q4, and I think what we've seen this year is that correlation with traditional asset classes and Bitcoin have held up quite strong. Most likely, the higher for longer interest rates and the stronger inflation numbers that we've seen are probably putting at least a lid on how much we can rally into the year. And
Ben, thanks for joining in. Always a pleasure to talk to you.
Thank you very much for taking me.
Well, time for a quick break then. We'll check in on the NFT markets when we return.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
Thanks for staying on with Forkast IQ. Now, blockchain technology is meeting art at the landmark Museum of Modern Art, or MoMA, in New York. The museum is launching a collaborative project called MoMA Postcard, which invites people to experiment and create together using Web3 tech. Each postcard has 15 blank stamps that grows with each artist as an interactive NFT. So while we continue to see interesting Web3 projects launch, the value of NFT markets shows very little signs of recovery. Bring in Forkast Labs data analyst Yehudah Petscher to talk more about that. Yehudah, how's it looking?
Hey, great to see you. Well, down and down the NFT market continues to go. Do traders care? Seemingly not. In fact, they're celebrating like it's peak 2022. And while I'm sure outsiders are looking in, probably a bit confused, let me clue them in. NFT traders are not really here for profits. They're here for the community. That happens to be a meme in the NFT space, but it's actually very true. Last weekend, the iconic digital artist Beeple threw a party for the CryptoPunks community. The vibes there, a perfect reminder of why people are so into NFTs. They make connecting so easy. Now just try to imagine why that may be useful for brands. Before we get into that, let's take a look at the NFT market, starting with the Forkast 500 NFT index, which of course, showing that declining value of NFTs. We've been talking about that here for well over a year, but also showing earlier in the week a brief return to the green. I know traders are happy to see us break that trend of market losses. Now, we wrapped up another week and month in the NFT market, like you would expect, both showing the market down significantly. In fact, last week was our 6th consecutive week of declining NFT sales, finishing with just 58 million in sales cross-chain. September also finished as the 7th consecutive month of declining sales as well. Just $295 million in total NFT sales across blockchains in September. That was the lowest month of NFT sales since January 2021. That's a 32-month low, and you should certainly expect that we're going much lower over the next couple of months here. So where have all the traders gone? Well, plenty of metrics show they haven't left. In fact, if our sales now mirror early 2021, I have to point out that our number of buyers, sellers, and transactions exponentially higher than that time. And again, I love to point out those metrics because those show the growth in the NFT market in a way that the sales just can't. So traders haven't left. Instead, it's the crazy prices that have disappeared. Average sale prices now hanging around $40. And to be honest, I don't think anybody's actually upset about that. We're also seeing some trading moving away from the Blur marketplace and the points farming that was happening over there. Well, now these speculators have moved over to Friendtech point farming, highlighting how much of the NFT market was actually wash trading and pure speculation. No story was bigger last week than the announcement from one of NFT's top collections, the Pudgy Penguins, that their adorable penguin toys and plushies would be featured in 2,000 Walmart stores across the United States. You might recall the Pudgy Penguins making similar news earlier in the year when their toys were available at Amazon, quickly selling over $500,000 worth of those toys in just a few days. As NFT projects try to solve the mystery of how do you raise funds in a sustainable way, well, the Pudgy Penguins, led by Luca Netz, may have cracked that code. Can they also figure out how to drive value to their holders while maintaining the premium price of their NFTs? They're walking a tightrope here, offering both budget toys and high-priced collectible NFTs. Here's the thing though, the toys you see in stores, well, those are modeled after NFT holders' Pudgy Penguins. The owner of the NFT art associated with the toy earns a royalty on every sale of that toy in perpetuity. Pretty interesting, isn't it? Ultimately, will the Pudgy Penguins be able to survive SEC scrutiny? Does this royalty benefit make the NFTs a security? Now, on the gaming front, last week we saw the release of one of the world's biggest video games with a highly anticipated launch of Counter-Strike 2. Many gamers may not be aware, but millions of dollars worth of Counter-Strike skins are traded as NFTs every week on the D-Market marketplace. In fact, D-Market's often one of the top-selling NFT collections, often outselling the Bored Ape Yacht Club and CryptoPunks combined. And yet some people, I would even say many people, still doubt that gaming and NFTs belong together. Look, I'm a 40-year-plus vet of gaming, also a veteran now of the NFT industry. I guess you could say I'm speaking from experience here. My opinion, it's not a maybe, it's not an if, it's a most certainly NFTs and gaming go hand in hand, it's just a matter of when. And by the way, Microsoft's recently leaked roadmap, it showed a possible crypto wallet integration. Sony also has filed for patents for NFTs, so the writing is clearly on the wall here. Now, more news about NFTs in real life. NFT conferences, always exciting topics in the NFT space, and Gary Vaynerchuk announced that his VCon convention is going to take place again next year, this time in Los Angeles. Taking place between August 9th and 11th, VCon is the intersection of pop culture, business, and tech, and I have to say, if you're picking just one NFT conference to attend, you have to make it this one. And let me wrap this up with two honorable mentions, not directly NFT stories here, but they, again, will impact NFTs in the future. Mark Zuckerberg appeared on the Lex Fridman podcast, showing off the most high-tech avatars we have ever seen in something called Kodak. That gave us just a glimpse into the metaverse that so many people have written off that we all know is really going nowhere and that really is going to be every bit as big as we all had dreamed of. And we also saw U2 kicking off a concert experience, but also a digital art experience at the Las Vegas Sphere. Again, what does this have to do with NFTs? Well, first off, they've had an NFT artist, Rafik, featured on the Sphere already. But more importantly here, the way the Sphere is going to inspire creatives all across the world. So the metaverse looking really, really impressive. VR's right around the corner. These toys arriving IRL. Look, NFTs still very important and still worth paying attention to. Back to you.
Yehudah, always great to hear from you. On that note, let's take a quick break and we'll get you insights on how blockchain data analytics firms are playing a role in rebuilding trust in the crypto ecosystem. Don't go anywhere.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built and Forkast has it covered. This is Forkast News.
Welcome back to Forkast IQ. Asia is shaping the future of digital assets, but crypto activity in the East Asian region, which includes China, Hong Kong, Japan, South Korea, and Taiwan, is struggling to keep pace with the rest of the globe. According to the latest report by blockchain analytics firm Chainalysis, the region is home to only the fifth most active crypto market in the world. The series of crypto-linked bans in China are the possible reason for the declining activity. But Hong Kong's status as a special administrative region of China and its growth as a crypto hub is being read as a sign of China becoming more open to crypto initiatives. Hong Kong also received an estimated $64 billion in crypto between July 22 and June 2023, much of it because of the highly active over-the-counter or OTC markets. Meanwhile, crypto trading in Japan is mirroring global averages, with activity split between centralized exchanges and various decentralized finance protocols almost evenly. In a statement sent to Forkast, Cheng Yi-ong of Chainalysis said that while Eastern Asia is not near its dominant position of 2020, it is one of the few regions that has been trending up in terms of capturing global shares over the past 4 quarters. Now, as crypto adoption spreads across the world, bad actors are not too far behind. Forkast editor and Asia correspondent Will Fee takes a closer look at the issues hounding the industry and the role of data firms in addressing them.
Trust, the very foundation of a financial system, is the glue that holds together the world of money and makes sure the wheels keep turning. But the collapse of innumerable crypto firms and projects, from Terra Luna to Celsius, 3 Arrows to FTX, and the arrest of high-profile crypto founders like Sam Bankman-Fried, Su Zhu, and Alex Mashinsky, among others, has, for many, decimated trust in crypto. News of scams, hacks, and other assorted crypto scandals have become a mainstay of mainstream and blockchain-focused media. So what could build back the trust in crypto and blockchain systems? Information and data could be the answer. Blockchain transactions are traceable. Once on-chain, a transaction is recorded forever for all to see. Blockchain analytics firms like Nansen, Chainalysis, Glassnode, among many others, collect and analyze billions of on-chain datasets.
If you look at crypto, because you can analyze the blockchain and you can build out an entity graph, as we have done, with very high resolution, you can get an understanding of the various use cases, what is going on, what is the amount of abuse happening on the blockchain, what is the illicit activity happening on blockchain, what is the impacts of sanctions, and all of that, as the only asset class in the world, you can measure with extremely high precision.
While that level of transparency is of course welcome, security is a whole other ballpark. The multi-year attack on Tokyo-based Bitcoin exchange Mt. Gox remains the biggest heist in crypto history. Similar attacks of varying scale have occurred throughout the decades since. The Chainalysis Crypto Crime Report for 2023 found that illicit crypto transaction volume hit a record high of $20 billion in 2022, despite the overall downturn in the market. And the prevalence of crypto crime has continued in 2023. Blockchain security firm Certic found that September was the worst month for crypto thefts this year, as hackers made off with $329.8 million worth of crypto. That included the $200 million hack on Hong Kong-based DeFi platform Mixin Network on September 23rd. Earlier in the month, a hacker took control of the X account belonging to Vitalik Buterin. The hacker encouraged Buterin's followers to connect their wallets to a bogus NFT project. They then drained out funds totaling almost $700,000. Elsewhere, the Lazarus Group, a hacker syndicate with ties to the North Korean government, continues to target cryptocurrency holders, reportedly as a means of securing funds for Pyongyang.
It's highlighted, I think, a lot more weaknesses in the business models that are going on for NFTs. It's also figured out a lot more highlights on things like wash trading. We like to think of wash trading as any trade that happens that wasn't intended to hold a position in that asset. It was more intended to be a wash, and that could happen for any number of reasons.
But illicit activity in the industry isn't just confined to wash traders focused on get-rich-quick schemes or hackers targeting individual investors and exchanges. The collapse of the Terra stablecoin platform last May kicked off the current crypto bear market. Terra founder, South Korean national Do Kwon, attracted international headlines as he went on the run in an attempt to avoid sanctions for his part in the platform's downfall. He is currently in jail in Montenegro after attempting to board a plane to Dubai using a forged passport. Coverage of Kwon's legal travails, pale in comparison to the media spotlight, shone on former crypto poster boy Sam Bankman-Fried. His crypto empire crumbled in dramatic fashion amid revelations in November 2022 that FTX had an $8 billion shortfall in customer funds. So, given the supposed transparency of blockchain and the analytics available, you could ask the question, why did no one realize what was going on sooner?
I don't think the industry wanted to listen, to be honest. I don't think any actually wanted to listen. They wanted to believe, and they wanted to believe that this is going to last a little bit longer. There might have been some signals, but it was really hard to show it to anyone. And the honest opinion is that a little bit more than a year ago, no one cared, because they kind of wanted to believe that this is where it is. This is going great.
The challenge then for the crypto industry in the wake of the FTX scandal is getting the public back on side despite a severely damaged image.
Nansen and other analytics providers can be very, very helpful to create more transparency for everyone. And this is frankly one of the main benefits of blockchains versus traditional finance, right? We can actually create transparency because natively the technology works in the way it does. So I think this is, it's super exciting for us to be able to help on that front.
One of the key tools in the locker for analytics firms is the emergence of artificial intelligence.
And I would say we've had two main revolutions in the field of AI. The first one was deep learning around 2013, and the second one now is with GPTs. And so there's a lot of stuff you can do now much more easily with GPT in particular, large language models and so on.
The other major challenge is maintaining the fine balance between transparency and privacy. Some of the decentralized finance platforms monitored by blockchain analytics firms aim for complete privacy.
You have to accept that you cannot have 100% transparency and 100% privacy at the same time. So it becomes a question of trade-offs, right? There are no perfect solutions, only trade-offs. There's a spectrum of like how much tolerance we want to give to large transactions and so on, which becomes to some extent an ideological question and maybe even a political question. And it's something we have to figure out over the next few years.
Can blockchain analytics firms continue to tread that fine line between transparency and privacy? Can the incorporation of new technologies such as AI help identify and even prevent the next damaging collapse along the lines of FTX? If those efforts fail, will there be a market left to analyze? These are questions of existential importance for what is still a nascent crypto industry. For Forkast, I'm Will Fee.
Well, that's a wrap on this week's show. Thanks so much for tuning in. Remember to like and subscribe to this video if you're watching us online, or stay tuned on this channel right here if you're watching us from your home, your office, or anywhere else. It's easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. I'm Forkast Megha Chaddah. Join us again this time next week as we bring you more from the world of Web3. Forkast IQ, get intelligent in Web3.